And we're live. Hello, everyone, and welcome back to ILS's lecture series on biopolitics. My name is Arne Kusche, and I'm proud to be the one presenting this evening's lecture, Mr. Michael Roberts, whom you may already know from his previous lectures for the Institute for Labor Studies. He lectured for the Institute in 2013, on the Euro crisis in 2014, on the socialization of banking, and in 2017 on automation and AI. For those of you not familiar with Michael and his work, he is a Marxist economist and author of several books, including The Great Recession, A Marxist View, The Long Depression, World in Crisis, and Marx 200. His newest book is Engels 200, his contribution to political economy, which was written to celebrate the 200th anniversary of Engels's birth. Michael regularly writes for his blog, which you can find at thenextrecession.wordpress.com. Recently, his blog posts have focused on the economic aspects and consequences of the COVID-19 pandemic, and this is also what Michael's lecture will be about tonight. One last thing before handing the reins over to Michael, I'd like to invite all of you watching this live stream to type any questions you may have for the lecture into the YouTube chat, which you can, of course, find at the right-hand side of the video stream. As usual, once the lecture is over, there will be a Q&A segment, and I promise to read out as many of your questions to Michael as time and energy will permit. Now, without further ado, Michael, the proverbial floor is yours.
Well, thank you, Arne, for the Institute of Labour Studies inviting me to speak yet again. It's been some time since I last spoke at an ILS meeting and a conference. And I'd just like to say before I go into that the Institute has been a major force in the small country, nevertheless, of Slovenia in developing socialist and Marxist ideas. And it's not going to be forgotten historically, I think, in the work that it's done, both in the past and hopefully in the future. And this new set of lectures which the ILS has launched, I think if those viewers who are watching now could follow future ones, they will also gain a great deal of knowledge and information. Tonight, or this evening, the ILS asked me to speak on the pandemic and the political economy of the pandemic, which maybe is my special area. So I'll be concentrating on what's happening in the world economy, what the impact of COVID-19 has been, and where it's going to go over the next period as we go into 2021. To do that, I'm going to share some graphs with you, hopefully, that I will get up as soon as I can. Hopefully, Arnie, we can all see that. So let me start by going into the first question that comes before me. I don't know if everybody can see that. Is that okay, Arnie? I just wanted to check with you. I think it is. The question is, where did COVID come from? Because many people who, when the pandemic appeared, when the disease, the virus began to spread from a region in China across the world, it came out of the blue, or so it appeared. It appeared that it was something like an asteroid hitting the world, a complete shock, which was not expected and not predicted, and has come and slammed the Earth, the planet, and our livelihoods and lives over the past 11 months, out of the blue. But was it really out of the blue? My argument is, and the argument of many epidemiologists and virologists and ecologists, is that it's not out of the blue. What has been happening over a recent period, particularly in the last 20 to 30 years, is the emergence of new pathogens, new dangerous germs, if you want, that can infect human beings who have no immunity. All the old diseases for which human beings, particularly in urban communities, have developed immunity to, now we have a new range of pathogens which have spread into humanity over the last 20 or 30 years. SARS, MERS, and now this latest one, COVID-19, as it's called. And the point is that this has happened, the argument goes, precisely because of the rapacious expansion of capitalism into all corners of the world over the last 50 years in particular, but even further back. Now we have massive urbanization. The vast majority of the world is urbanized. People live in urban communities. That urbanization is spread into all parts of the world. We have a rapacious drive, an incessant drive towards timber logging, fossil fuel exploration, mineral exploration, the building of various structures and so on. That means that human beings are going into the remotest parts, and the result of that is that a lot of these pathogens, which have existed for thousands of years in wild animals in remote areas, like in bats and other animals, have come into contact, first of all, with farm animals and then food markets. The pathogen has spread through the food chain into human beings themselves. So this is the result of industrialization, and in particular uncontrolled industrialization with no consideration for the impact on the environment. So it's not a bolt out of the blue. Yes, there have been very more serious pandemics in the past, going back to the days of 2000 or more years ago. And of course, the largest pandemic in the 14th century of the Black Death killed nearly up to 39% of the Europe's population. And the smallpox epidemics in the 16th century, a series of them, basically spread from European conquerors and settlers coming into North and South America and wiped out 93% of Native Americans in North and South America as a result of diseases for which they had no immunity. And that's been a historical thing that has developed. So there's been pandemics before. The Spanish flu was the most famous one in the early 20th century, which it is estimated wiped out about 2.5% of the then world population. HIV/AIDS, another dangerous pathogen that spread through from animals, has also had an impact in the 1980s. At the bottom of this particular chart, it would suggest that COVID-19 is not a very serious one. Only 0.2% of the world's population have died from COVID-19 yet. But of course, it's still early days. The pandemic is not over. And also very large sections of the world still really haven't had much of an infection. And that figure will go up, as I will show when we look at some of the other countries. And the most important thing I think to say at this point is that COVID-19 is not just another flu. There's a lot of argument going on in social media and elsewhere to say that it's really not dangerous. It's only killing very old people. Young people are unaffected on the whole, unlike Spanish flu in the early 20th century, which hit young people. And really, the rate of deaths is not much worse than flu. Well, that's not true. First of all, it's much more infectious. The RO number on the top of this chart tells you that it's 2 or 3 times more infectious than annual flu. It lasts a long time to cover that infection, maybe up to 14 days, while flu disappears within 1 or 3 or 4 days. The hospitalization rate has proved to be much higher, so people tend to get iller or more sick from COVID-19 than they do from flu. And we now know leaving long-lasting damage for many people who suffer a severe bout of this COVID-19. And the case fatality rate, that's the number of people who die from those who catch it and have to go into hospital or have to have medication, is something like 3% compared to 0.1% for at maximum for flu. So it is way more dangerous and way more infectious and way more deadly. And yet nothing has been done in preparation for these pandemics, these new pathogens to hit humanity. Back in September 2019, just a few months before COVID-19 hit, the UN's World Monitoring Board that looks at the dangers from global pandemics and what needs to be prepared for pointed out that there's a complete lack of political will on the part of governments around the world. National leaders should be responding to health crises when fear and panic grow strong, but most do not devote any energy or resources needed to keep outbreaks from escalating into disasters. Just 3 months before, that is what the UN was saying. And of course, that's what it turned out to be the case. And if you look at it into the capitalist sector itself, the vast majority of pharmaceutical products and industries are privately owned. They're not produced by the state for the use by the people. Their drugs and other methods of dealing with serious diseases, vaccines and so on, are produced by capitalist companies for profit. And on the whole, Big Pharma has done little or no research into antibiotics or antivirals to deal with these new forms of viruses that are spreading across the world. Of the 22, I think is, or 28 of the 18 largest US pharmaceutical companies, 15 have totally abandoned the field of looking into antibiotics, antivirals in these areas. They concentrated on heart medicines, tranquilizers, and other things which are much more profitable in the more richer parts of the global north, and not to deal with any defenses against hospital infections, emergent diseases, traditional tropical killers which kill millions every year around the world. For example, a universal vaccine for influenza, that's a vaccine that keeps us immune from the danger from flu every year, has been possible for years, but nobody has spent the money, no pharmaceutical companies spent the money on providing a really effective flu vaccine. So every year those that should have a flu vaccine only really have 50 to 60% efficacy out of that. There remains every good possibility that you could get flu, and flu, of course, remains a killer, if not by any means as big a killer as COVID-19. Also, before this pandemic began, health systems around the world were totally unprepared and under-resourced. Over the last 20 to 30 years, it's been a policy of cutting back on public spending, so public health services have been decimated or privatized. In the case of the United States, they're virtually all privatized. So hospitals are producers for profit, not for providing a service and a health service, and mainly limited to health emergency. Most hospital systems have reached the situation before the pandemic of so-called 99% efficiency. That meant that basically there was no buffer to have extra beds or extra resources in case there was a serious emergency, because they were trying to minimize the costs as much as possible. On this graph here, you can see the hospital beds per thousand as before the pandemic began. And you can see the countries that, as we now know, that have done most effectively in dealing with the pandemic and keeping death rates and cases down are countries like Japan, Korea, and Germany, which have a very high level of hospital bed rates, which enables them to meet the dangers of a big overflow of capacity. Even China, which is only in the middle of that row, also is relatively high to some of the countries like the US or the UK or Sweden, whose really hospital bed per thousand have been drastically reduced over the last 20 years. Much of Europe's in that position. Slovenia, as you can see, is actually slightly better than the average, but even so has been reduced over the last 20 years. Then if we look at this as a measure of how to consider how serious COVID is, if you consider that you've got the case fatality rate, that's the number of people who die once we know they've contracted COVID, as against the infection fatality rate, which is the number of people who have died in relation to the total population that have been infected. We now know, for example, that probably 10% of the population around the world, and varying degrees, have been infected. Many of those people have shown no symptoms and therefore don't end up as cases for doctors to consider or hospitals to admit. So there's a difference between the case fatality rate and the infection rate. notice that the annual flu rate is normally between 0.1 to 0.1%, the annual flu fatality rate. So it's way, way low. You can see with the red bars here gives you the fatality rate from infections at moment, as we know, the world is about 0.2, which is still twice as large as the flu rate, but other countries are averaging between 0.6, 0.7% of people who are infected die. That's a relatively high rate, and certainly way higher than flu. And that rate will continue to rise as deaths rise, even if infections do. This is the blue lines are all the case fatality rates, the number of people who die once they've been brought to the attention of doctors and hospitals. So the point about this graph is again to demonstrate that COVID-19 is not some hoax, it's not some unimportant danger, it is a deadly danger to millions of people around the world. It turns out mostly old people and mostly people who have got other vulnerable problems, already got some sort of other illness, so comorbidity, two possibilities, age and being vulnerable or sick, means that they've got a very high fatality rate, 18 to 20% in people over 75, 80. Some people say, well, it doesn't matter about people over 75 and 80, they haven't got long to go. Well, that's not strictly true, particularly in the Northern Hemisphere, where the virus has hit the hardest, is that many people in their 70s and 80s have still got 10, 15 years of life yet left, and maybe good quality life. And that should not be wiped out just because we're considered to be old. We're not in the world of culling the old and the sick by allowing a viruses to spread in this way. And again, another stat just to demonstrate that COVID-19 has created a higher level of deaths over the past few years compared to the average over the past few years as a result of the spread of this pandemic. The percentage excess deaths over normal deaths, and that includes flu and everything in 1 year, in the case of Italy, is 38%, nearly the same in the UK. And you can see in most of the Northern European countries, it's anything between 20 and 40% excess deaths during 2020 so far. The US, 25% more. And we have countries like Brazil, and I haven't left out the smaller Latin American countries, which are even larger. Those countries have succeeded to keep the death rate down much more. Germany and France, at least in the first wave, have not had such high excess deaths. But here we are now. As of last week, we now have daily something like 600,000 new cases per day. We've now had 60 million cases altogether and nearly 1.5 million deaths to date. And the daily death rate now has reached something like 10,000 a day globally. So, and if you look at those charts, you can see that we are not in any significant decline as far as the pandemic is concerned. That we now, what we call into a second wave, at least in some countries, in the case of the US, it never has dropped much at all. And if you look at this position here, you can see on the left-hand side, in this new winter wave that we've seen a dramatic increase in cases and deaths in Western Europe, just beginning to come off now at the end of November. In the case of the US, which never really fell back much, we're now reaching record levels in terms of cases every day. And we can also see, this is per million, it's taking out the affected population. We can see the similar phenomenon. Now, Western Europe has had fatalities of up to, per day, 7 fatalities per day per million. And the US is also rising again. So we're in this new wave. The pandemic is not over. And if we look at the impact so far on the number of deaths for some of the major countries, we have many Northern European countries or Northern Hemisphere countries in Europe that lead the death rate, this ugly figure here. Italy being second after Spain, UK very close. And of course, in Latin America, there's been a disaster too, with Mexico and Brazil. The US is still racing upwards. And I put in a few Balkan countries here, where you can see that the Balkans generally sit in the middle there, with something like over 700 deaths for places like Macedonia, Bosnia, Montenegro, and so on, Croatia. And in red, we have Slovenia, which is pretty high across the world, and certainly if not as high as some of the other European countries, Croatia further down. Austria and Germany, close neighbors here of the Balkan area, have relatively low rates, but Italy, on the other hand, very high. And it's still accelerating, as I said, across the world, in the European Union, in the US, and of course in Latin America. But also you can see I've put in Italy here, Slovenia, Croatia. They are racing ahead now of the average in the European Union, in Austria, and so on. This is a deteriorating situation in the areas in which the Institute of Labour Studies is operating. So COVID was not a bolt out of the blue. It's a product, it's yet another in the cycle of pandemics from dangerous pathogens that have been developing before 2020. Governments, health systems, health companies were not prepared, not willing to be prepared, were unable to cope to begin with, and were forced into major lockdowns, which drove the economy, the world economy, into the biggest slump, which I'll come to in a minute. But another factor that drove the world economy into the biggest slump we've seen since 1930s, if not before, was the fact that the world economy was already in a form of depression. There had been a significant slowdown in world economic growth up to 2019 after the end of the Great Recession in 2008. I argue in my book, The Long Depression, that we can consider there are periods when the capitalist economy doesn't just have a boom and slump. So if you look in the top left-hand corner here of this schematic diagram, most booms and slumps take the form of a slump, a V-shape, back again to the previous level. That happened in 1974-5. Sometimes a double dip recession. First up, back again, down again, then back to the trajectory before. But sometimes in the history of capitalism, I have discerned that we have this, which is like a reverse square root. We have a slump, there is a recovery, but it doesn't return to the previous trajectory. It's lower. Growth rates are now lower in the period after that slump. That's the situation we had in the late 19th century, in the Great Depression of the 1930s, and in the Long Depression so far since 2008. This 2012 figure, perhaps coming up here, but basically staying well below trend growth rates. So even before we had the pandemic causing a major slump, I think we were heading towards a new recession anyway. For example, if we look at the left-hand side of this screen, you can see that the lasting damage after 2001, the trajectory dropped from the on the trend growth rate in the US, for example, which is the dark black line from 1995. If there'd been no slumps, it would have been up there around about 80K per capita head from 40K, doubling. There would have been a doubling by now in the size of the average GDP per person in the US. But actually we had a small slump in 2001. So the trajectory then was along this gray line. So looking towards 60. But then we had the Great Recession of 2008-9. And so actually the trajectory, the blue line, meant that by the time we get to the point of the pandemic, the US GDP per capita is way below where it could have been if the trajectory had stayed at the same as it was in 1995 to 2000. That demonstrates the growing weakness of capitalism, particularly in this case, US capitalism. And we can see a similar idea in this graph. The trend growth from 1970 right up to the 2008 slump, it drops down. Here is the actual growth rate now since 2008 up to 2019, before the pandemic. And that is the estimate of the investment bank Goldman Sachs forecast for where it will end up by the end of this year as a result of the pandemic. A significant drop. And that means if it continues at a trajectory over here, it is way, way out of line what used to be in the 20th century. A severe setback for capitalism, particularly US capitalism. And it's a product, really, of steadily falling investment rates in the major economies. You can see that the average investment rate as a percentage of GDP in the 60s was around about 20%. In the 90s, it had fallen to 18 to 19, just about holding to that level up to the point of the Great Recession. And we've seen a huge drop in the investment rate during the Great Recession and no real recovery to anything like previous levels. You might say, well, 21% to 18%, that's not a lot. Well, actually, that is something like a 15% fall in the average investment rate of the major economies. That's a significant fall in their ability to deliver more resources, more employment, and more products for people around the world. And we can see that if we just look at the investment rate, if we take out, replacing old machinery and old technology, if we look at what new investment is taking place, innovatory new technology investment, we can see from about 2008 a big slump in the investment rate. Then, as a percentage of GDP in the OECD economies down from what used to be 8%, so that's 8% of GDP in productive investment after replacing old machinery. Now we're down to 4 or 5 before the pandemic, and now the pandemic is taking us down to anything around about 2. We shall see where we end up, but it's way, way below. And the product of this, the reason for this falling investment is that it's no longer profitable for the capitalist sector in the major economies to invest productively. They've experienced a significantly sharp fall in the profitability of investing in productive sectors of the economy. So the capitalists are reducing their investments because their profitability is fallen. This is particularly the case. We can go through the whole period since 1950, but I won't. If you just take it from the 1990s, you can see a gradual decline in the rate of profit in the top 20 economies of the world. And before we get to the pandemic, we're down to a level of around about 8% on this graph, compared to something like 10 or 11 at the peak of the 60s. And the trajectory is downwards. So the pressure was on already to reduce investment all the time. If you just look at emerging markets, economies, the big ones, Argentina, Brazil, China, India, etc., you can see a similar phenomenon, even a sharper decline since 1998 and since the Great Recession. Profitability for capitalist sectors of the economy was falling, investment was reduced, growth slowed down, everything was heading for a continued stagnation or a depression that could only be resolved probably by another slump in 2020 anyway. And debt had built up hugely, so the corporate sector had expanded sharply its level of loans and bond issuance in order to help it through slowing investment, slowing growth, slowing profitability by borrowing more money in order to sustain production and what investment there was. So we now have most corporate sectors, that's the companies of the world as a percentage of GDP, having debt around about 90% of their GDP, compared to back at the beginning of the 21st century, more like 60 to 70%. So a significant rise in the debt, in corporate debt. This means that if you want to measure the amount of production relative to the increase in debt, you're seeing a sharp decline in the productivity of debt, if you like. So all that money being borrowed, supposedly to be invested to boost the productivity of labor, increase production and efficiency, is actually each extra unit of debt is reducing less and less production as a result. In fact, as we got to the point of the pandemic in this year, that the productivity of debt was 0 or even below. And at the same time, there had been significant change in the world rate of trade growth around the world. Before the Great Recession, average growth in world trade was about 6% a year, which was higher than GDP growth. So there was a way out for many countries, particularly developing economies, to export in order to gain extra growth if they didn't have the market to do so at home. But since the Great Recession, that growth rate in world trade has slumped to about less than half the rate before the Great Recession, only 2% a year up to 2019. And then, of course, we can see what has happened in the pandemic. A massive drop in trade to match what happened in the Great Recession in 2008-9. So, as we approach the pandemic, global profits for the capitalist sector of the economy had reached a point of basically zero. This is a measure of the increase in global profits in the 6 most important capitalist economies in the world. And you can see that in 2019 it was zero, and this year it's gone negative. The only time it does that, we usually have a slump. There was a slowdown there, there was a slowdown here, and of course we had the Great Recession here, and back here, the emerging market crisis. So my argument in this section is to tell you that COVID-19 was not a bolt out of the blue. It was an inevitable process of what was happening through rapacious expansion of capitalism uncontrolled through the environment, leading to pathogens coming back into humanity throughout the world. But also the world economy was in trouble economically and was declining to the point where a recession was inevitable. And then we got the lockdown. And the lockdown, as you can see, has led to a really catastrophic fall in the world economy. The blue line is the fall in GDP for the advanced economies, and the red line is the fall in GDP for the so-called emerging economies. A significant, huge drop, much bigger than in the Great Recession in just a very short period of time, less than a year so far. And just about every country in the world in this COVID slump, this pandemic slump, have been forced into recession. If you look at the 1930s, perhaps there was something like 80% of most economies in the world had a slump. This is what this measures. In the Great Recession, something like 60% of the world's economies had a recession, but nothing has been quite like the pandemic of 2020 slump, where now 95% of all the world's countries have been forced into a slump as a result of the lockdowns and the virus. The impact has been huge. And if you just look at the record drop in GDP for some of the major economies up to the first half of this year compared to the beginning of the year, we got Spain down 23%, UK down 22%, and so on right down the period. US appears to be lower, but that will possibly change by the end of this year. Only one country on this list has avoided a significant slump or any slump at all, except for a brief period, and that is China. And we'll deal with that question a little bit more about why that is the case. But just looking quickly at Slovenia, there's no escape from Slovenia from this. You can see GDP constant prices before the pandemic have reached around about here. That's the size of the Slovenian economy. And look at the slump, where the slump so far has taken Slovenian GDP back to the levels of 4 years ago. That's all been lost in the past 9 months or so. And here's a list of all the countries that forecast the actual year-end decline that we expect. The UK is now forecast to be the second worst in Europe, only beaten by Spain with an 11.3% fall. You can see Slovenia here is around about 7%. Croatia, for example, nearly 10%. So just about every European country is suffering a significant fall, some smaller than others, Germany smaller, and some very large indeed, unprecedentedly large. And that also affects employment. Around the world, there's been a massive drop in employment and a rise in unemployment. These are figures for the drops in employment up to the first half of this year for major economies. So compared to the level of employment at the beginning of 2020, you can see that employment has dropped by anything between 15 to 40% some of these major economies. Now, that still has not showing any sign of improvement in the second half of this year so far. And also for the first time since records began in the 1950s, the so-called developing economies, the poorest countries of the world, have suffered a slump. Even in the Great Recession, they did not fall below zero, because this figure includes China and India. That's why. China and India were the fastest growing economies, big economies anyway in the world, meant that this average stayed above zero. But then in the COVID pandemic slump, India is down 10%. China fell briefly for a couple of quarters, but it's recovered. But it's driven, all the other emerging economies have driven into a severe slump. And for the first time, the average figure is below zero. And this has meant massive poverty developing in the pandemic. Nearly 4 billion people in the world live on less than $5 a day, which is a very realistic threshold for poverty, unlike that of the World Bank, who says you're only poor if you earn less than $1.90 a day, ludicrously low figure. But if you just think about $5 a day, there are 4 billion people living on that, less than that figure at the moment. There are 150 million children who are living in poverty without access to essential services. 188 countries now have imposed school closures in the pandemic, affecting 1.6 billion children and young people. And they don't have all the facilities that happens in the more advanced economies to maintain some level of schooling at the moment. Also, there's been probably an increase of something like over 1 million under 5 deaths in the last 6 months because of the reductions in health service coverage as health systems try to cope with COVID. And as many as 132 million people may go hungry this year, of which 1/4 are children, and 370 million children are missing out on nutritious school meals. So a third of the world's children, 463 million globally, are unable to use remote learning, and when their schools are closed, that's the end of it for them. And they've lost now nearly 4 months of schooling as a result of the pandemic. This means that the poverty levels that have supposedly been falling, the blue line is the World Bank's measure the fall in poverty levels based on a very much lower figure, and includes China, where poverty has perfectly been more or less eradicated. But now, as we enter the COVID, a sharp increase in this year in the level of poverty from the previous trend fall, shows you the gap. Now, huge numbers of people entering the poverty level set by the World Bank for the first time in decades. How has the world capitalist economy and their governments tried to cope with this? Well, the main way, if you take the US, is to give to boost money printing and give massive loans out of central banks, not so much into the hands of working people made unemployed or losing their livelihoods, but into businesses and banks in order to keep their heads above water. The result of this huge largesse has been that the stock market, after collapsing from the shock of COVID, has rocketed upwards to record levels. So we sit here with millions of people facing unemployment, billions of people facing more poverty, livelihoods under threat throughout the world. The stock market is booming in the United States and elsewhere. The fiscal packages, that's the government spending in order to try and keep people going, have been dramatically increased as well. But the vast majority of this funds, and these are huge figures, 11% of GDP in 1 year. The UK has just announced that if you include everything, it's something like 19% of GDP in 1 year for the UK government. These huge increases in government spending and so on have mainly been directed in providing employers with money to lay their workers off, some paychecks to workers, but to boost our unemployment assistance, not really providing anything permanent in the way of supporting and preserving jobs. And millions of small businesses now face going bankrupt and not returning after the pandemic is over, when it is over. But the biggest fiscal spend in history was necessary. Otherwise, this terrible situation we see for millions would have been 10 times worse without any measures of fiscal spend. Mainly, as I say, to maintain business, particularly big business and the banks, and only to some extent to maintain working people's livelihoods. As a result, in my view, which we'll see, What happened there? I shall restore us in a second. Right. We've seen a significant rise in bankruptcies around the world as small businesses in particular are no longer able to survive, even with the limited help that they've got from governments. So if you see over here, you see a very sharp rise in the bankruptcies in the US economy, millions of small businesses going to wall. And that means that the people who are currently either unemployed or being furloughed, being laid off, will not get their jobs back. They will not be able to return because the businesses that they work for will no longer exist. And that brings me to the next section of this lecture. After the pandemic, what is going to happen? Well, first, let's remember that incomes have been permanently lost. If you look at it this way, as I was saying about the trajectories before in growth, that's where the world economy is going, along this line before the pandemic came. Then it's dropped dramatically down. There's been a relative recovery. And even if it returns to the level of the pandemic, which is the 100 there, by the end of next year, which is the forecast of the IMF, still well below the trajectory that it should have been at, all this blue area is loss of income, output, livelihood for the world forever. That will never return. Because we've fallen, the economies have fallen down here, growth has collapsed, all this area has been lost forever. And that's what happens in capitalist crises. They leave waste and a cumulative output loss that can never be restored. Some countries have suffered worse than others. And I think this is an argument I will present in the case of China. Those countries which had good health systems, like Japan and Germany on the whole, and East Asia, employed test and trace effectively, and brought in firm lockdowns from the very beginning, particularly in the case of China and so on, to ensure that the virus could not spread, are able to keep their losses fairly low. So countries that have had the biggest loss in output, which is down here in the bottom left-hand corner, are also the countries who've had the biggest cumulative deaths. The countries with the lowest cumulative deaths up here have had the least amount of impact on their economy. What that tells you is that lockdowns, test and trace, proper health systems could have avoided much of the economic impact which has resulted from the pandemic. Countries that did not apply lockdowns, didn't have decent enough health systems with enough resources, didn't apply test and trace properly, ended up down this area. Here's two countries which claim that you didn't need lockdowns on the whole, some states in the United States and Sweden. The result is that they've had a significant decline in their economies, and their death rates are not far short of the bigger European countries which applied lockdowns far too late to deal with the crisis. And these two countries, particularly the US, is heading in this direction right over here. It's coming up here. This is an old graph. The US is already really down here at the moment. So more containment means a better impact, less impact on the economy. But the economic and social cost, as recently measured, has been dramatic. It's not just GDP that's been lost. It's also human lives, premature deaths for millions of people, or hundreds of thousands, long-term health impairment from COVID, and also mental health impairment. People having to be locked away, isolated for ages in order to protect themselves is having an impact on their ability to feel happy in a condition to live a proper life. You can measure this economically if you wanted to, and that's what's been done on this paper, which shows that something like $16 trillion worth of economic and social cost has been lost during the pandemic in the United States so far. So that's nearly as much as the annual production of GDP in the US, something like 75% social cost of an annual GDP in 1 year so far. That's the indication of how severe this crisis is. And that leads me to argue that we won't expect a V-shaped recovery. First, with 90% of the world's economies contracting in 2020, that level of synchronization means that no region or country is able to offset the contraction taking place in other countries because of trade and investment declines, the only exception probably being China. Second, a major slump in world trade, as I said, means that there's no escape by looking to export things abroad if your domestic economy is in trouble, because everybody else is in trouble. Also, as we saw earlier, the very low level of investment ahead already, and profitability means it's very difficult for the capitalist sector to do anything about this crisis and get out of it. And so we've now resulted in the largest yearly decline in per capita GDP around the world in the last century and a half, and certainly the largest decline since 1945, which means it's going to take a long time for that destruction to repair. And the huge additional debt incurred in trying to cope with this means that there's a massive misallocation of resources, and many capitalist governments will be trying to claw back the cost of this debt by making working people pay through taxation and cuts in public services over the next few years. And there is no end to the pandemic. As we saw earlier, new cases continue to rise, and we continue to see, particularly if you look at the blue line, decline in the activity now as we enter the winter wave, lockdowns everywhere. I know in Slovenia that's the case, but also across Europe and in other countries, which means that economic activity is declining, and activity just going around, transporting people around, traveling and so on is going down as well. So there's no real improvement in the ability to restore the economy. Here is a figure which shows you the dramatic collapse in mobility and economic activity in the early days of the pandemic and during the heavy lockdowns, then an apparent recovery as we got through the summer, but now as we can see, as we enter this winter wave, it's beginning to die away again. So the total activity now across the board in the Northern Hemisphere on average is 25% below where it was when the pandemic started. Well, the vaccines are coming. We are going to be saved. A white knight is on the way, a silver bullet is on the way to solve all our problems. There are some doubts about that. First of all, vaccines are never fully effective. The argument of the very new COVID vaccines announced in the past couple of weeks is that they're 90% effective, we shall see. And then we must remember that this is just COVID-19. There could well be more pandemics on the way. And also, even these vaccines, if they are that effective, only have a limited life, maybe a year or two. Health systems remain severely underfunded and inadequate to deal with the new wave. And there's no international plan of cooperation to control any of the things which caused this in the first place, fossil fuel exploration, industrial farming and so on. So there's no end in sight for future pandemics. And also there's no international coordination of producing and distributing these vaccines around the world. So even if the vaccines become available in the first quarter of next year and they begin to be spread or distributed, it's going to take some time before they begin to have an effect in reducing the infection. And yet there is still no improvement in the world economy's trade, in particular, which will enable things to improve dramatically. As you can see, the trajectory of trade before the Great Recession was that blue dotted line. Then the Great Recession took the trade trajectory down to this yellow line. And now in the pandemic, depending on how optimistic you are, we're in a position where trade may never return to the yellow dotted line, which we're on. Or if it does, it will take well past not just 2021, but into 2022 and maybe further. And we will remain with huge deficits in most of the economies around the world as a result of the spending done to try and ameliorate the effect of the pandemic. Huge fiscal gap, which eventually will have to be closed in some way unless we go on increasing debt, both private and public, over the next period. Public debt is now at a maximum level, over 100, 120% on average in most of the economies of the world. That's way higher than it was even in the two world wars. And this position means that either we have to keep interest rates for the cost of that debt down to zero so that it doesn't cost much to service and growth returns, or eventually there will have to be something done about that debt, because that government debt is owed to bondholders and capitalists around the world. And if they don't get their interest on it and they don't feel they can get their payment back, then there could be a severe problem for particularly smaller economies around the world. Already there's been a number of defaults on government debt in small economies like Zambia and others as a result of the fact that nobody wants to lend them any money and they cannot meet the debts, service the debts. The interest on those debts is beginning to rise even before we get to the end of the pandemic. So now that something like 10% of tax revenues just go in debt interest on average for most economies around, that's worth a considerable figure. And that will rise over the next period. We've not seen anything like that in the last 20 years. And on the private sector, it's even worse. A massive increase in the amount of debt for such a large number of companies means that many companies, something like 20% of the top companies in the US, 200 big corporations, are in a position where the interest that they pay on the existing debt is more than they're getting in profits from production and sales. So that means that what we call a zombie company, they're surviving by borrowing more because they cannot actually meet the interest costs on existing debt without borrowing more to pay for it. It's a vicious circle which 20% of US companies are in. And that's just the US. Across the world is the same thing. Only one country has escaped from this disaster, and that is China. As you can see on the world scale, this is this reverse square root to the trajectory of growth through to 2022. But in fact, the slump has taken it right down here in this light blue line, and probably by the end of 2021 will be here, still way below where we were before. In the case of China, that's a different story. They can have a V-shaped recovery. They come down, they come back, and they continue on the previous trajectory, while the rest of the world is struggling down here. And that's because of a number of reasons. First of all, China has a big state sector which has been able to invest. It's implied a severe lockdown when the first COVID pandemic cases started, and it's now carried through a massive campaign of trace and test, and its health systems are geared up to deal with this in the most significant way. And by funding huge amounts of investment from the state sector into the economy, it's able to begin to recover much more quickly than the capitalist economies have done so far. So here we have again the same argument of this reverse square root. We're dropping down and no real recovery. So the world economy is stuck in this area here for the foreseeable future. No return to pre-pandemic levels. The gap will remain permanently. And even in the US, which has been a better economy than Europe in the past before the pandemic, will struggle to return to this level. See the dates here. We're talking, these are forecasts by one of the major forecasting companies. They're talking about the end of 2022 here and the end of 2024 here for the US in getting back to some previous level and still falling short of the trajectory. That's the sort of prospect we have ahead. Now, Marx used to argue that what happens in a boom and slump cycle is when there's a crash, the slump creates the conditions for getting rid of old dead wood, zombie companies, companies that are no longer profitable, removing old technology, and the more efficient and more effective and more profitable companies soak up the market and take the place of those that have gone bust. And then that way the slump kills off the weak and the smaller allows the more efficient and large to consolidate. And then you get a recovery. Joseph Schumpeter, a major Austrian economist of the 1930s, call that creative destruction, the innovative companies replacing the weak and less effective companies out of slumps. So slumps are actually healthy for capitalism in the sense, not healthy for us, not healthy for working people, not healthy for the majority of the population, but healthy for capitalism in a way by re-establishing the basis for growth again. But this is not likely to happen this time because central banks have massively increased the amount of debt. Many public companies now just borrowing money rather than allowing themselves to go bust, or governments forcing them to go bust. So there's more consolidation, but less innovation, and the presence of these zombie companies. So this is the opposite of Schumpeter's great idea of creative destruction. Much more likely, we will continue to have another leg in the world economy of long depression. So I'll finish on this, everybody. The Secretary General of the United Nations said that the world economy is at a breaking point. He was talking only not so long ago. He said that we could look at the pandemic as being likened to an X-ray, revealing the fractures in the skeleton of societies we've built. It's exposed fallacies and falsehoods everywhere. What does he mean by that? First of all, this is the Secretary General of the UN saying, it's a lie that free markets can deliver health care for all. That's certainly been proved in this pandemic. It's a fiction that care work is not work, that people looking after old people and sick people at home are not playing a role in keeping things going. And yet nothing has been done to help them in this crisis. The residential homes have been decimated by the pandemic. People are locked at home with no support, and it's forced the population, their relatives and so on, to try and help out the sick and the old who have been hit by this pandemic. And of course, we've seen the explosion of racial incidents during this last year, the delusion that we live in a post-racist world. And also the myth, says Antonio Guterres, that we're all in the same boat. Big business, the big banks are booming. Amazon is booming. Microsoft is booming. Facebook is booming. Netflix is booming. But hundreds of thousands of small companies are going to the wall, and millions of people are being made unemployed. He says it's time for global leaders to decide, will we succumb to chaos, division, and inequality, or will we right the wrongs of the past and move forward to help all? Well, I think we know what the answer will that be is no. Here is the inequality levels in the United States before the pandemic. They're already reaching unprecedentedly extreme proportions. Pre-pandemic problems have worsened. Not only inequality, but also we've seen the increase in poverty, as I've described before, which will not be righted very quickly. And above all, perhaps longer term, global warming and climate change. There's been a fall in carbon emissions and greenhouse gases during the COVID pandemic because there's been less activity. But it's coming back again. As the economies are restored to new levels, then we will see a further rise in global warming. There's now, according to the latest estimates, a 1 in 5, a 20% chance that annual global temperatures will be above 1.5 degrees, set as the limit by the Paris Agreement on climate change within the next 5 years. We're going to pass that level. And once you reach that level, there will be more floods, more famine, more destitution. And nothing really is being done by governments to deal with this. Poverty is going to be as high as it was in the 1990s. Global warming is still uncontrolled. Climate change is coming with it. And environmental destruction continues with fossil fuel exploration, timber logging, plantations, agribusiness, and so on. And that can only breed more pandemics over the next decade. And we have growing international tensions, with the US, a weakening global power, facing a new economic and trade and technology rival in the 21st century in China. And we've already seen under the Trump administration, the tensions growing between these two major countries of the world in the economy and so on. And that situation is likely to continue whatever happens, because the US government, even under Biden, will be determined to try and clip the wings of China, so stop it becoming a major power that threatens US big business around the world. What can we do as socialists as opposed to what the capitalists are doing? We need to reset the economy. We need a global plan for full employment with jobs for all at a living wage. We need pensions and benefits for those who cannot work. It must be raised to at least 2/3 of the average wage. We need, if COVID has told us one thing, that public investment in public services like health, education, housing, transport, communications are absolutely essential. We need to massively increase that. These services should be free at the point of use, paid out of taxation, paid out of the rest of the economy, so that we can meet the basic needs of human rights around the world in health, education, and housing. We need an investment that's in harmony with nature and the planet, so we can end the spread of these pandemics at source. We need to phase out the fossil fuel industry to stop global warming and climate change. Just as we've attacked tobacco industry in the past, that's the same for the fossil fuel industry. And the military sector of the world economy must be dramatically reduced. The biggest consumer of carbon emissions is the military. They're the ones that are the worst as any sector in the world economy. And of course, they are also destructive. We need to cancel the debts of the poorest countries of the world who cannot possibly manage to pay the debts as they are exploited by multinationals, don't earn enough of income in order to pay these debts, and they just drive them further and further into difficulties. We need to end the tax havens for the rich and the powerful around the world. Something like 8% of annual GDP goes into tax haven countries where it avoids tax, losing government revenues to the tune of trillions every year. That could be a dramatic improvement of those resources if the rich and powerful paid their tax properly. We should have a proper progressive taxation, both in wealth and in income, to reduce inequality. And above all, we need a plan for the world that meets social need. In my view, that requires public ownership of the major financial institutions and multinationals through a world cooperative organization, so that we can plan and meet and invest for social objectives and not for the profits of a few owners of capital. So that is my lecture for this evening, Arne.
Thank you, Michael. Now it's time for the Q&A. Again, if you have any questions for Michael, please write them in the YouTube chat. We have a few questions already. The first is, what caused the profit rates to fall since the 1970s?
Do you want me to take them one by one, Arne, or?
Yeah, one by one. I think
Okay.
that would be the best.
Well, it's an important theoretical question. If we accept the empirical evidence, which I've shown in those charts, that there was a general decline over the long term, particularly in the post-war period in the major economies of the so-called West, in the profitability of capital, then as the questioner asks, well, what's the reason for that? Well, a number of reasons have been proposed. I fall back on what Marx said in his Law of the Tendency of the Rate of Profit to Fall. Marx wrote in volume 3 of Capital, where you can read it in chapters 13 to 15. Not a difficult read for those who haven't read it before, in order to understand this law. And the argument is this, is that the only way that any profits created is if workers go to work. So workers have to create value for the capitalists. How do the capitalists appropriate the value that workers make? Well, workers go to work, they produce a product using raw materials provided by the capitalist and using machinery provided by the capitalist. But the product that's produced, the commodities, that is now in the ownership of the capitalist. All the capitalist has done is bought some labor time from workers. The workers do not own that product. That commodity is then sold on the market, and there's a difference between the value or price that commodity is sold on the market and what they pay the workers, and that difference is profit, which is in the hands of the capitalists. It's then available for them to reinvest, re-employ the workers in the next cycle of production. But there's a limit on how much you can make workers work. They can't work 24 hours a day because they fall asleep. they die. You can't even force them to work much more than 8 or 10 hours, given social regulations, given trade unions, given the fact that workers have to keep a family and so on. So there's a maximum limit. There may be more workers, but there's a maximum number of hours, if you like, in a whole year that you can get out of workers. But in that hour, every hour that workers work, you can produce more. That is if you use machines, technology, which dramatically increase the productivity of labor. So although only workers create value, you can get more value per worker if you employ machines and reduce the number of workers you need and use machines instead, to the limit, for example, in the modern 21st century of using robots to do a lot of work that human beings do. But of course, if you do that, then you're not creating, while you're getting more productivity, more products out of workers, the value that you're getting out of workers begins to decline relative to the spending you're making on machinery and new technology. Just remember, even if you've got a fantastic machine that can produce 100 units compared to, without the machine, only 1 unit for workers per hour, if there are no workers to make that machine work, then there's nothing produced at all. So there's a massive increase. Capitalists are driven in competition with each other to increase the amount they invest in machines, but that means that relative to what they're spending on workers begins to decline. So you get a rise in the investment in machinery relative to workers. That means there's more value created, but the value per unit of extra investment the capitalists are making begins to fall. So this is the theory of the tendency of the rate of profit to fall, that the organic composition of capital, which is what Marx called that ratio between machinery and labor, begins to rise. There's a continual tendency for it to rise. It can be that it could be overcome by getting more value out of the workers, by exploiting them more, paying them less, increasing their intensity of work with machines, and all the other ways in which perhaps they could maintain the profitability, exporting abroad, reducing the cost of the machinery that they're investing in. These are all counteracting factors. But Marx argued that they'd only be counteracting factors, that eventually profitability would force downward, and over a period of the history of capitalism, that rate of profit would fall. And you can see that in the graph. In the graphs that I showed you, that is being proved evidentially by the empirical data, that there is a long-term tendency for the rate of profit to fall. And it's sometimes counteracted simply by slumps. The fall in the rate of profit actually creates the conditions by which capitalists stop investing. They're not making enough profit. They lay off workers. They go into a slump in production. They're producing too much they can't sell. So there's a slump. And in that situation, as I also described, then the more efficient capitalists wipe out the less efficient, creating the conditions for an increase in the rate of profit and the process to begin again. So the law of the tendency rate of profit to fall, that Marx argued, proves that there is a long-term tendency in the rate of profit to fall, but also it is an explanation of why there are booms and slumps in capitalism and why that process continues on a recurring and regular basis, and it has done so since the history of at least industrial capitalism since the early 19th century. So that is the fundamental explanation for the fall in the rate of profit. There are other Marxist economists who have slightly different ones, but I could discuss those perhaps, but that is the fundamental explanation as far as I can see it, based on Marx's work in Capital Volume 3.
I think that's an extremely thorough answer. So we can move on. So we can move on to the second question. The second question is, how do you understand the recent increase in Bitcoin value in lieu of the current or future crisis?
Yeah, well, it's a very good question. In periods of crises, investors, particularly speculative investors, worry about whether they should get rid of certain assets or buy certain other assets. Usually, if paper currencies, or what we call fiat currencies, that's things like dollars, euros, pounds, yen, and so on, the value of those currencies or the price of those currencies relative to other currencies, or particular to something which most people used to regard as fairly solid and safe commodity representing world money, gold, if the value of these currencies begins to fall, then speculators and investors don't want to hold these fiat currencies. They're in a slump, in a crisis when governments are spending huge amounts of money. There is a risk that they think that inflation should come back, that certain currencies are going to collapse, whether it's the Chinese yuan, whether it's the US dollar is going to fall. That's the main one that seems to be being taken to task by Bitcoin investors at the moment. They feel the US dollar is going to fall, that gold isn't a proper replacement, and they're looking for a new currency, a digital currency like Bitcoin and other cryptocurrencies, which they can invest in, because this will provide a speculative gain for them if the dollar falls. Because if Bitcoin rises to, say, $20,000 per Bitcoin, as opposed to $5,000 per Bitcoin, if you want to take that picture, which is what's happened really over the last few weeks, what that's really telling you is that these investors think the dollar is rubbish. So they're going to hold Bitcoins, and the expectation that they can speculate that the Bitcoin will continue to rise. So that's the immediate reason for this sharp rise in the price of Bitcoins in dollars at the moment. But let me just add a couple of points. This is all in the realms of speculative investment. Bitcoins are not means of exchange on the whole. We can't use Bitcoins to go to the shop. Not yet. It's not regarded by governments, it's not regarded by people as a currency that you want to use in regular means of exchange, or even as a store of value to keep your savings or your so on. Most people still look to their national government's currencies, or maybe other national government's currencies, as the measure of how much value they've got and whether they're going to store it. So the 75% of the world's assets are measured and stored in dollars when it comes to international trade and investment, not in Bitcoins. And so that's a situation that will continue for some time, if not forever, because at the moment, a currency that, like Bitcoin, it jumps from $5,000 to $20,000 in 2 weeks and back to $1,000 the next week, is not a currency that anybody can really safely trust as a means of exchange or a store of value or as a basis upon which you can take a long-term loan or make a long-term loan. It remains a speculative activity at the moment in a way to try and hedge against weaker currencies when they become weak or stronger. We shall see. If the dollar recovers from its relative weakness, and if the vaccines come back next year and solve the problem of the pandemic, and the dollar strengthens, we may see a collapse in the current Bitcoin and cryptocurrency prices.
Thank you. That was a great answer. Now, for the third question, how come the stock markets are at record levels?
Yes, well, as I briefly mentioned in the presentation, the main reason for stock markets being at record levels after the shock of the pandemic hitting, we saw a big drop in the stock markets, is the massive injection in credit by central banks around the world, particularly the Federal Reserve Bank in the US, but also the European Central Bank, Bank of Japan, the Bank of England. What do I mean by a massive injection of credit? So these central banks have issued huge amounts of credit or reserves and placed it in the deposits accounts of banks and said, here's $100 billion. Use it to lend into the world economy and to keep companies going by giving them loans. But a lot of this money has sloshed in, and there's hardly any interest being charged by central banks on this huge injection of money and credit. So what commercial banks and other institutions that get hold of this extra funding are doing is not so much investing in productive investment, because either the economies are locked down or because they're very uncertain about making any such investment. And so they just pumped it into the stock market. Big companies with huge amounts of extra cash have either bought back their own shares, and speculators and institutions have rushed in to buy all the major stocks, particularly the big high-tech stocks. If you look at the increase in the US stock market in the last 9 months, it's really concentrated in about 5, 6, or 10 companies. And you know the names of these: Facebook, Alphabet, Google, Microsoft, Netflix. These sorts of companies, tech companies, are the ones, the FANGs as they're called, have had most of their money injected into the prices of their stocks. And that's dramatically raised the indexes in the US and also across the world. And it continues to do so as long as speculative investors think that the Federal Reserve is going to keep pumping in money, the Bank of England is going to pump in more, the European Central Bank will be pumping in more next month, then the stock market, in my view, will continue to show these sorts of rises, completely disconnected from what's happening in what used to be called the real economy, in the world that we live in, for getting jobs, producing things, trying to make a living. It's totally disconnected. This is a fantasy world. It's what Marx and Engels called at one time the fictitious world, the world of fictitious capital, not real capital, but a fictitious world, which can cause collapse like a house of cards once it becomes clear that what is supporting it, this extra increase in money, which is just being printed like a magic money tree by the central banks, comes to an end, which it will do at some point.
Thank you. Now for the fourth question. Do you think the pandemic will contribute to China's geopolitical ascent? Is this something Western leftists should embrace or be highly cynical about?
Well, very good question. Quite a complicated one, I think, to answer. First, let's say that it's quite clear, as I argued in the presentation, that China has been the most effective or successful country or economy to get out of this COVID pandemic slump. It is already growing now in the second half of this year, so it only had a very short, if sharp, fall. And by the end of the year, it's estimated that the Chinese economy will be something like 2% larger than it was at the beginning of the year. Well, every other country in the world, including India, will be down between 5, 10, 15% by the end of the year compared to the beginning of the year. No other country, including some that have been reasonably successful in containing COVID, like Korea and Taiwan or Japan, will be able to claim that. They will still be negative at the end of the year. Only China, of any major economy, perhaps Vietnam's the only other one, where there'll be some growth this year. So we have to ask ourselves, why has that happened? I argue that is because the Chinese economy is distinctly different from all the major capitalist economies. The majority of the economy is still controlled by the state, directed by the state, and owned by the state. That means that the state and the Communist Party government is in a position to dictate terms, not only to the state banks, to state industries, to expand, to organize, and to invest, but also to dictate, to some extent, terms to the large capitalist sector in China, which has to follow the lead of the state sector when it's led in this way. So the result, this is the effective result of a relatively planned economy with state direction, which doesn't exist really in any other major economy, not in any other G20 economy. I think that's the explanation of why China is coming out of that. Now, that doesn't mean to say China has solved all problems. It's running up quite large debts. It's still unable to expand its manufacturing exports because the rest of the world is in a slump. It is still unable to be sure that it can expand and increase the economy in such a way as to ensure an increase in productivity, which is necessary in order to meet the growth and improvement in living standards in China, because the Chinese population is becoming stagnant, particularly the working population is beginning to fall, so that the only way China is going to grow at the sorts of levels we've seen over the last 20 years, 5, 6, 10%, is if the productivity of labor increases through the use of new technology, as well as the expansion of trade into new areas. And that's where the US comes in, because the US and the other Western governments see China as a threat to their control of world trade and investment, to the profits of their major multinationals. The state companies of China beginning to develop technology, which in the case of 5G and other technology areas, threatened dominance in these sectors. And so this had to be stopped. Huawei, TikTok, other companies that now are being checked and curbed and banned around the world to stop the spread of Chinese technology and its control over trade and investment. So the very success of the Chinese economy, particularly in COVID, is going to intensify, in my view, the attempts of US imperialism and the other major capitalist governments to try and weaken and control China. The anti-China campaign, China started the virus, China's laboratories deliberately spread the virus, the Chinese are trying to take over and destroy freedom and democracy in Taiwan, in Hong Kong, and so on. They are committing genocide against the Muslim minorities in the Northwest. All these things, which have little or no truth in them, only limited amounts of truth in them, are being used in a major way to set the world's population against China, and also politically and economically and technically to try and control China. This is going to be the big battle of the 21st century in how this develops. COVID has shown the success of the planned economy. It will increase the fear of US and Western imperialism and then this need to deal with China over the next decade or two.
Thank you. We have a couple of more questions. I think these will be the last two questions since we're approaching the hour and a half mark, which is around the time we start ending lectures. So the fifth question.
Because people get tired, need their dinner.
Yeah, exactly. So the fifth question is, will countries' bailouts keep zombie companies afloat?
Will they bail out zombie companies?
Will countries' bailouts keep zombie companies afloat?
Yeah. Well, most of the zombie companies, not all, are small ones. I think up to now, that has been the policy of central banks and governments in the advanced capitalist world after the end of the Great Recession, that they allowed these companies, particularly with interest rates so low, to continue to survive by borrowing more money. There's been no tightening of borrowing. There's been no increase in interest rates. There's been no restriction on borrowing, quite the reverse. So it's possible for all these zombie companies to continue indefinitely over the next period. In a more, how can I put it, more drastic capitalist regime, they will make these companies go bust and they create the conditions for a leaner and fitter capitalist economy. But that's politically so disastrous because it will mean a dramatic increase in unemployment and the loss of livelihoods for hundreds of thousands that central banks and governments, at least since the end of the Great Recession, have not been prepared to resort to that policy of tightening borrowing requirements, raising interest rates to crack these companies. And as far as I can see, as we come out of this pandemic, if that is what we do in 2021, that policy so far has not changed. So we're going to have an increase in zombie companies. Now, the problem with this is, even despite all the cheap money that is being available so that they can borrow at low interest rates, that if there's no recovery in the profitability of these capitalist economies, then this debt will become burdensome to the point, even with zero interest rates, where we will start to see a significant number of bankruptcies. So one of the things in 2021 we want to watch for, if vaccines enable economies to come back to normal, and then we could have an expansion of the capitalist sector to some extent with government help, then maybe these zombie companies will not go bust. But if that does not happen, then we're going to see a whole series of bankruptcies by this time next year, which could have a cascade effect. So in this pandemic slump, we started with a collapse in production as there were lockdowns taking place, followed by a collapse in demand because people weren't working anymore, they weren't earning any money, So we had a collapse in demand and spending, and people couldn't spend any money anyway to travel or do anything else. The next leg in this pandemic slump, maybe next year, will be a financial crisis when many of these zombie companies go to the wall, and governments are either forced to let them go to the wall or bail them out with yet more debt, perhaps kicking the can down the road a bit further, but only creating a more serious financial crisis later on.
Okay, thank you. And now for the last question. How can we enforce better taxation policies when facing the international mobility of capital, capital flight, etc.?
Yes, how can we? As I pointed out, tax havens that big multinational companies and very rich people use around the world to spirit their money out of their home country and away from the grasp of government tax inspectors constitute something like 8 to 10% of world GDP. It's a massive amount of money that is spirited away, avoiding tax, apart from straightforward cheating and evasion and so on, which also goes on. The answer to this is very difficult if you continue to have huge multinational companies which are able to continue to function in this way. There's been some vague attempts for international cooperation recently in trying to harmonize tax regulations and rules so that some of this tax haven money can be controlled. But really, it's drop in the ocean. The only way that you're going to stop multinational companies and the banks that back them from laundering this money out of the control of governments for money which they earn profits at home but don't pay the tax on them, the only way we're going to do that is really to have public ownership of these organizations. That will bring an end to this process. I don't think we can expect international cooperation to achieve some sort of decent regulation and control and taxation of these companies any other way. Within a national country, within one country, we can do something about changing taxation systems. Back in the 1950s and 60s, we had income tax, which is relatively progressive. That means the more you earn, the more percentage tax you pay. In the US, for example, the very highest earners were paying 90% of that last 100,000 in tax. That has been dramatically cut back. Personal income tax levels, particularly during the neoliberal period since the 1980s, have been cut back so that the top earners, the latest figures were shown in the US, that the top earners pay less percentage of tax out of their earnings than the bottom earners. Can you believe that? That the poorest people in the US pay a higher percentage of tax out of their income, which is low, so they pay less tax in total, than the top earners do. And this is a ridiculous position. So far from being a progressive income tax situation, that's just income tax, then we have a regressive situation. And then we have all sorts of taxes which particularly hit the poor, like VAT, sales tax, payroll tax, and so on. So we have a totally regressive taxation system in all the major economies of the world now. Corporation tax has been cut to shreds, to nothing at all, from say 20 or 30% of corporate profits to down now to 15% on average. And in reality, as a lot of it doesn't appear on the books, even less than that. So we could do something there. Governments, even bourgeois governments, could do something about reversing this regressive nature of the tax. But will they do so when they're beholden to the interests of multinationals and the rich who finance their political campaigns and so on? Only parties of the labor movement could have such a program for progressive taxation, raising corporate tax, ending the tax havens, and reducing huge rises in inequality of income and wealth that we've seen over the last 30 years.
Okay. Oh, let me just bring myself up. Oh. Oh, can you hear me?
Yes.
Slight technical difficulties. Okay. Well, that's it for this evening's lecture and Q&A. Michael, thank you for your insightful answers and for doing this lecture. I think, at least for Marxist ears, you're always a pleasure to listen to. And I hope we can have you on again in the near future once the pandemic settles down, of course. Before we go, I'd like to remind our viewers that the footage of all of Michael's previous lectures for the Institute for Labor Studies can be found on the ILS YouTube channel. Please subscribe to our channel for more lectures and other video content. And if you want to show your undying devotion to us, like us on Facebook, follow us on Twitter, and subscribe to our mailing list. We'll see you again next Thursday with a roundtable discussion in Slovene on the housing crisis in Slovenia during the pandemic, which will feature Matej Križanec and Klemen Ploštajner from Kje bomo pa jutri spali. Until next week, dear comrades, stay well, stay safe, and stay strong. Bye-bye.